Hello, everybody, and welcome to the monthly market memo for the month of January 2025. I'm Case Eichenberger, the Chief Investment Officer with Retire Path Advisors. And in today's short video, we wanted to talk about some of the major themes that were moving markets for the month of January regarding the stocks, which ended the month higher, and bonds, which also ended the month higher. So let's go ahead and jump into this short video. So far in January, stocks were across the board were all higher from small caps, mid caps, large caps, overseas stocks. All stocks were higher, and most of them outpaced cash for the month of January. Now, there is a Wall Street adage that says, "So goes January, so goes the year." So, if January is positive, is this good news for the rest of 2025? And we do really do believe so. Actually, we crunched the numbers and looked at some research, and if January is higher, which it was, we have almost a 90% chance of ending all of 2025 on a positive note. There's hardly any instances. There are a couple, but there are very few where you started off January on a high note and then the market went down from there. So far, so good for the month of January as all stocks moved higher, and you get about an average return of close to 13%. So we're off to a good start here for January. Now, something on the other side of the news spectrum, if you will, there was some bad news that kind of hit at the end of January. I'm recording this at early February. And the news of tariffs, which really it shouldn't be a surprise at this point. That was one of President Trump's um, things he was talking about when he was running for election. And they have come to fruition here in Colombia, in Mexico, Canada, China, but we really do believe they are negotiation tactics, but they will cause stock market volatility in the short term. Actually, if you look at this chart from Yahoo Finance on the right-hand side there that I'm highlighting, you can see that the mention of tariffs have really increased across S&P 500 companies' earnings calls that we pay attention to very closely here at the firm. And it's when corporate America is picking up and talking about them more that can really maybe have some knock-on effects. It can lead them to not invest as much as they really want to wait and see till the smoke clears. But so far, these have been negotiating tactics used by President Trump that he's levied on countries to get them to the table to renegotiate maybe free trade or put more people at the border to stop the flow of immigrants and illegal drugs, which was the news today at the beginning of February and or over the weekend, actually. You've seen stock market come down, and then Mexico came out and said, we will put tariffs on, but maybe only in a month's time. So there's going to be a lot of movement here, and we just really would like you to focus on your long-term plan and stay invested according to that plan that has been put in place with your financial advisor here at the firm. So short term, we do expect volatility, but long term, this is really more of a negotiation tactic, and we'll have to see really what gets in place for the long term there. Now let's switch the gear to bonds. Sorry, just to recap on stocks. Again, a very good month. We do expect 2025 to be positive as well, but let's stick to bonds. And bonds had a good month as well. We saw some of the reasons why that happened was inflation. Core CPI came in lower than the month prior and below the expectations, which was very good for bond prices. As inflation continues to come down, you see here at about 3.25 for core CPI. We do expect it to be good for those bond returns in your account. This is further evidence that inflation moving downward can continue to progress, albeit at a slower pace than anticipated. But overall, inflation has come in mainly in line, and that has helped bond returns have some positive returns for the month of January as well. And then finally, let's talk a little bit more about bonds here, and we'll wrap up the video. But always keep in mind that the higher starting yield is very predictive of the future return. And right now, yields are right around 5% on core bonds. This does provide capital appreciation potential that do support core bonds over cash in the next few years. So we've actually seen cash here on the chart. You can see how it's much higher than core bonds for a couple years, and then lately, as the Fed has begun to cut interest rates, cash has come down in yield, and core bonds has actually come up in yield. So this is a really good time to be excited about core bonds. We do expect them to deliver those returns, of course, over the 5-year period or so that you have a maturity on them for. But so far, at about 5% yield compared to a little over 4 in cash, this is a very attractive position to be in to continue to have core bonds as part of your portfolio. With that, we'll wrap up today's video, and we do appreciate you. We approach the management of your complete financial landscape very seriously. As a trusted steward, advocate, and confidant, we are completely committed to you. If you have any questions on today's video or anything else, please reach out to myself, your Retire Path personal advisor. You can always email our direct line, call our direct line, and we'll make sure we help you out with any questions that you may have. Thanks again, and we hope you have a great February.